Cathie Wood just went on CNBC, spoke about a wide range of topics. I just want to get straight into this, guys. Appreciate you joining me. Thank you for being subscribed. Make sure you're subscribed. New all-time high subscribers. Let's get straight into this.
Good. Cathie, it's great to have you back on the show.
Thank you, Morgan. I'm really happy to be here.
So much to talk about, but first I do want to start with a broader market question. At a time where even some market bulls have been suggesting that this rally is getting a little long in the tooth and questions should be raised about the valuations we're seeing. How do you think about the market here? Are you considering different positions across your funds as we do see some of these biggest names, particularly in tech, reaching new highs?
Yes. So right now, we've had a bit of a setback thus far this year, a little fear, higher for longer again in interest rates. But just think about the numbers that we're beginning to get out of the big macro-oriented companies. 3M's revenue down 4.5%. That's negative, both units and prices. And I just heard you on Texas Instruments. I think their sales this next quarter are going to be down at the midpoint, something like 18%. That's year over year. These are revenue declines. We've been saying for quite some time that there are more deep.
By the way, if you want to know my opinion on semiconductor stocks, Texas Instruments, things like that, I spoke about that on the main channel here today, along with Alibaba, Tesla, and a few other subjects.
Forces out there that many people recognize. A lot of them are coming from China, now more so as well from Europe. And I think that here in the United States, we won't escape that. So we actually think interest rates are going to fall sooner and faster, I think, than most expect. And so in terms of valuations, that should be very supportive to valuations.
It should be supportive to valuations.
So that's the scary part, folks. That's the scary part. She expects interest rates to drop. What's so scary about that? Well, if they're doing that, it's likely because recession fears are like not just fears, it's actually like happening, right? And so imagine a scenario where it's not just China, it's not just Europe, and it actually starts to bleed in the United States in a substantial way. Also, next thing you know, you see jobs lost, things like that. That's why I say I'm in no rush to get rate cuts, because usually once you start getting rate cuts, usually the economy starts faltering in a major way. You might think it's all going to be great from there, and it's not always like that, folks. That's what scares me about this whole situation. So, I'll hold off on rate cuts as long as we can.
If you believe that we're in store for a soft landing then, or if the Fed's behind the ball and cuts are going to be even more steeper than perhaps the market is anticipating.
Yeah, we've been saying that we've been in a rolling recession, we believe, for 2 years, and that the Fed is going to find out that 5.25 to 5.5 was just too high given the deflationary forces that are building out there. We think there's going to be outright deflation this year, price deflation, some of it good, associated with technology and learning curves and so forth, but some of it bad, which is more of the hard landing scenario. It won't be like 08, 09 at all. We've been in a rolling recession for a long time now, but we do think we're at the end of it and that the Fed will lower interest rates.
Speaking of deflation, Cathie, Tesla has been cutting prices on cars. Investors have been cutting Tesla's stock price. You bought Tesla last year when it was cheaper than this. I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down, if it continues to go down this year?
Well, if you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margin. So when it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric.
Wait, before we go any further here, she's talking about basically trading Tesla, right? It's like, okay, people are excited and sell, and then people are depressed buy. What do I think about that? The bottom line is, my opinion is, I believe you'll get lower returns. And not just slightly lower returns, I think you'll get much lower returns versus just a strategy of long-term holding. And if there are any major dips and crashes in the stock, you pick up some shares and you're like, this is undervalued, I'm going to pick up some shares based upon where the company's going over the next 3, 5, 7 years. I think your returns will be much, much better than the strategy of, okay, time to sell some shares. Okay, time to buy some shares back. And it's been proven throughout history. And so that's my opinion with that. And do I think Cathie Wood in ARK Invest has any sort of competitive advantage when it comes to trading stocks? Absolutely not. No way.
And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down.
Okay.
In price. Tesla.
What she's talking about here, there's a good point about Tesla being able to bring down the cost of the vehicles. The problem is we haven't been able to offset that with how much they've decreased the price of the vehicles. So it's like we got some good news with them bringing down costs, but it hasn't been enough to offset. That's why you continue to see margins go lower and lower, and probably will for the next 1 to 2 quarters before hopefully we trough and then we start to head back up margins in the back half of this year.
Can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe, and even here in the United States.
Did you hear what Texas Instruments just said after the bell? They just said something very important about the state of the automotive market for 2024. What they said is they expect demand to be lower in part because of automotive. So they were talking about guidance weak, not actually because of smartphones, like you might think. It's actually automotive. And they also mentioned some industrial chips, for some applications there. But automotive was specifically called out by Texas Instruments.
Let me challenge you there with what Hertz just did, backing away from EVs, saying, people really love Teslas. That's not translating into how much Tesla's cost to repair and maintain, and the viability of them maintaining a fleet. So I understand that you're trading around it now, but for the people at home who don't necessarily do that day by day, where's your even mark? Where if it goes below here, that's when you're really pushing into it, leaning into it.
I don't think they have one.
Well, we cannot talk about what we are going to do prospectively, but just to address Hertz. There is a learning curve with EVs, and I think a lot of people go to Hertz and say, I'm going to try my first EV, and they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay. Last year, electric vehicle sales globally were up 28%, while gas-powered vehicle sales were up 9%. So share gain still.
I think you're going to see something amazing when it comes to Uber rides in Tesla specifically. What I believe you're going to start seeing is massive amounts of Uber drivers, and this is really over the next 3 to 5 years, starting to drive Model 3s and Model Ys. With how affordable these vehicles have become now at this point in time, never mind if we get another uptick in gasoline prices over the next few years, I think it's just going to push more and more people in. And you got to remember, a lot of these Uber drivers might want to buy used vehicles, and you can get Model 3s for very affordable prices now in the 20s, right? Model Ys, you can get used Model Ys sometimes in the 30s now at this point in time, right? Never mind the ones that are buying them brand new and getting the federal tax credits and all those sorts of things. So do not be surprised if, over the next 3 to 5 years, the majority of the time you start getting in a vehicle on an Uber ride, it's going to be a Model 3 or Model Y. Just, wait for that, okay? And when it comes to maintenance, I'm somebody that's had Teslas for years. I can tell you maintenance is way cheaper with Teslas, at least from my experience of driving them over the last 5 years, roughly. I've had a Model 3, I got a Plaid right now, and I got a Model X that I've had for years now at this point in time. And anytime I've ever needed anything to get fixed, either Tesla pays for it, or if I've ever had to come out of pocket, it's usually very cheap compared to, I can tell you, a lot of internal combustion engines. So, that's just my experience over the past roughly 5 years of driving Tesla.
Also want to ask you about the commentary we did hear from Musk on X not that long ago, where he basically suggested he wanted 25% voting control at Tesla before fulfilling this AI goal at the company. As a key shareholder, how do you feel about that?
You know, Elon Musk is a visionary leader. He's our Renaissance man. He's the inventor of our age. And in this market dynamic where investors are very short-term oriented, they want their profits now, their dividends now, their share repurchases now. We are looking for visionary leaders to stand up to short-term oriented shareholders because they need to invest aggressively now to capitalize on some of the biggest opportunities in our lifetime. So we're all for it.
I want to shift gears here a little bit. Bitcoin.
Yeah, personally, before she starts talking about Bitcoin and other subjects, what do I think about Musk in wanting, a bigger portion of voting shares? Personally, I'm on board. I agree. I have no objection with that either. Elon Musk, so much of his net worth is tied to Tesla stock. He's going to make whatever the best decisions are for Tesla, right? And he's done a tremendous job since taking this company public back in, 2010, 2011. I mean, the stock price speaks for itself. The revenues speak for themselves. The profitability speaks for itself. So I am fully on board with him, and I think he's got another 10 to 20 years of his prime business life ahead. And so I have no objection with him holding more of the voting shares. I'm on board with that as well. I have no objection at all. I'm totally on board with that. That man's going to do everything in his power to make, obviously, Tesla as successful as possible in every market.
Your Bitcoin ETF debuted about a week ago now. We've seen the price of Bitcoin come off since those approvals were greenlit, and we've seen shares of ETFs, including ARK21 shares Bitcoin ETF, come off as well. Is this a sell the news dynamic? Is something else at play here?
Just as I said, it would be.
How do you think about that now that we actually have these instruments in the market to track Bitcoin in a more material way?
Yes. Well, we're very excited that Bitcoin now is in the ETF wrapper and therefore very accessible at very low prices. What we do have, and there was speculation beforehand, will this be a sell on the news? We said yes, and then we were hearing that so much that we thought, well, maybe not. Well, it turns out that FTX is, I guess it's nearly $1 billion in GBTC, has been sold as this Bitcoin, as the Bitcoin ETF has come out. And I think that's been part of the pressure. I do think there's sell on the news because I think some people expected it to hold a little more than it has. But this has not disturbed our point of view at all. We think this is one of the most important investments of our lifetimes. This is a global rules-based monetary system. And it's a very big idea. And we think it's the biggest of all of the crypto ideas out there. So we're very happy to be a part of this movement.
Okay.
Providing more access to Bitcoin. This is the financial superhighway, a public good, and therefore we have priced it accordingly. But we're very excited about the prospects. Our price target, as you know, is quite high if you give us a time horizon to 2030.
Yeah, I think 1.5 million to your point. I am curious about the other aspects of cryptocurrencies, though, specifically Coinbase. It's the dominant U.S. exchange. It's also your top holding in the ARK Innovation.
The bottom line, the important thing to remember in regards to this whole ETF Bitcoin situation, right? Just like I told you, it's going to be a buy the rumor, sell the news event. Sure enough, it was. The bottom line is it's a benefit long term. No doubt it's a benefit long term to Bitcoin. Short term, not really. I mean, at the end of the day, most people that wanted to buy Bitcoin already owned it through a Coinbase or somebody like that. And so, like I said, long-term benefit, yes. Short-term, not, just as I thought it would be. And that's why Bitcoin's dropped nearly $10,000 just in a matter of, a week or two? Now at this point in time, it was up to 48 and some change, now down to 39. That's a pretty big drop.
ETF. And we did have this downgrade from JP Morgan today to underweight. One of the things they say here is that they think the catalyst in Bitcoin ETFs that has pushed the ecosystem out of its winter will disappoint market participants. Your reaction?
Yes, I think, okay, there's the short term and the long term. I think what he is missing is that
ARK Innovation, Top Holdings, Coinbase, Tesla, Roku, Zoom, UiPath, Block, CRISPR Therapeutics, Twilio, Roblox, Unity. Of those, only ones that interest me are, well, Coinbase not as much as it did, I'll put it that way. Tesla obviously still for long term, and then Zoom's actually, I think, pretty compelling at its current valuation. Square's okay, I like PayPal much better.
Institutions are gearing up to buy Bitcoin. It is a new asset class. They have a fiduciary responsibility to look at it because with a new asset class, diversification can increase returns per unit of risk. And so sophisticated asset managers know they need to provide some access to their clients. So I think institutions are gearing up. I don't know when they're going to move in, but we know they're doing their due diligence because they're talking to us and others, of course. So we're pretty excited about the kinds of questions we're getting. They're very sophisticated. It tells us they've done a lot of their homework. They're very focused on infrastructure and operations, for example. And I know there is a firm out there who says it's crypto first. Well, we've partnered with the largest pure play crypto ETP provider in the world. And I think that our execution, if you look at spreads and so forth, as traders, market makers do, we are looking really good. So we think that the JP Morgan downgrade is a very short-term call. It follows prices, not surprising. We think that it does not consider the institutional wall of money that we think ultimately will enter this space. And we're pretty excited.
Cathie Wood, always great to get your thoughts on a wide variety of topics.
Thank you, Mark.
Yeah, so interesting thoughts there. You know my opinion on Cathie Wood. I think she's got a few good stocks, and I think she's got a lot of stocks that are, just not good opportunities for the next 3 to 5 years. We're talking about several years out. So, anyways, by the way, Tesla earnings tomorrow. You want to join me for the live stream? Pin comment down there. I'm going to be live on Twitch tomorrow, streaming those earnings, the conference call, giving live reactions, opinions, perspectives, all that stuff. So that'll be pinned comment down there if you want to follow me. Much love, folks. Appreciate you joining me, and have a great day.